Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back once again to the Fintech Times News and Views podcast. Tom, Francis, how are you guys doing today?
I am very well, Polly. I'm very well. It's the first time in a few weeks that I don't feel like I'm being roasted alive by the UK weather. It's actually started raining here, so it's cooled it all down a little bit. And yeah, I mean, friend's wedding last week. Also, we had like nice weather then, so it's been a nice little change of pace. You know, feel pretty good. Feel pretty good.
Good. We love to hear it. Tom, how about you? How's it going?
Yeah, not too bad. It's been a nice week this week, barring the weather. But I'm looking forward to getting the sun back and looking forward to diving back into fintech.
Absolutely. And what a time to be looking at fintech. What are the big stories this week? What are we going to be talking about today? Tom, what are you bringing to the table?
So this week I'm bringing the fun because I'm talking about AML compliance and how worried firms are basically about breaching these sort of compliance rules.
Lovely stuff. A very poignant topic. Is that the right word I want? But Francis, what are you talking about this week?
Oh, sorry, just real quick on the way that Tom said that. All I could think of is like Jack Black and just like time to bring the thunder or something like that. This week I'm going to be sort of taking a different sort of channel to what we usually talk about, I think. So my article this week is going to be focusing on brands and specifically how consumer demands are shaping the way in which brands are offering their products.
Awesome stuff. And then I'm going to be looking at early wage access and how it's helping with financial worries among different people. But does anyone want to go first? Anyone volunteer?
I'm happy to volunteer. So basically, I'm talking about my article from earlier this week. A new report from the UK-based digital compliance solutions provider SmartSearch, who revealed in their report that over 2/3 of regulated firms in the financial sectors are concerned about committing an anti-money laundering breach. So 2022 saw around 6.4 billion pounds laundered using cryptocurrency and an estimated 6.7 billion pounds of suspicious funds invested in UK property. And with money laundering becoming such a prominent issue or remaining such a prominent issue, the report explains the onus that's on financial firms to ensure compliance. But they also revealed that a lot of these firms are worried because they don't think they're going to comply or they're worried about risk of not complying. So it found that casinos were really anxious about their regulatory risks because 34% explained they're very worried about breaking the rules, while about 18% of crypto exchanges were similarly nervous about their compliance responsibilities. And despite all these concerns about failing to comply with the regulations, a large proportion of firms also admitted to continue to rely on flawed manual processes to verify their customers. So in total, around 40% of these firms said they verify new individual and business clients manually, and that they wrongly believe that copies of official documents like passports or driving licenses provide enough reassurance that their customers are genuine. But SmartSearch has warned that criminals can easily forge these official documents, and by not verifying them in more detail, firms are making themselves unnecessarily vulnerable to the very breaches that they're worried about committing. So I just thought, while it seems very easy to blame these financial institutions for not doing enough, I wanted to get your guys' take on it. Is it just down to them to comply, or is the space maybe so complex that it's causing all these firms to worry and they're not really understanding, like in the case of, verifying documents? Do they need more support in understanding what they actually need to do to prevent money laundering and to comply with the regulations surrounding it? So I'd love to get your take on it, Polly, first, just about the space.
Yeah, absolutely. And I think, compliance stories like this and new research similar to sort of this kind of thing does come up quite a lot, I think we find. And I think especially now with the regulation landscape, what it is, a lot of with the cracking down on like crypto as well, that's coming up. And just generally regulation does seem to be getting a bit tighter, at least in the UK, which I don't think is a bad thing, like at all. But then I guess I don't run a financial firm. But I think it's good to be concerned about compliance, right? Like if you didn't care about compliance and you had no worries whatsoever, that's when I think everyone else should be concerned, because if you're not caring about what you're doing, then obviously you're probably not going to have the safest company or safest operations. So I think having that concern level there is good. I think what the problem is that people don't seem to be doing anything about it, even though that they are very worried about their compliance procedures. And I think that's a really interesting thing. And I think it's interesting what you say, whether is it a case of they're not understanding, like the procedures so complex that they don't understand what they need to do and they're worried about getting things wrong, or is it that they just don't want to, and so they don't want to dedicate the sort of the resource to doing it because they've always done things one way, and so bringing in a new process is just time consuming and blah 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 blah. So I think it's a really interesting thing here about what is the reason behind not wanting to act on these worries. And I think, if you have such a large concern, particularly when you're looking at like crypto or maybe like challenger banking and things like that, surely you need to be doing something to make sure you're keeping up with your regulation and make sure you're not doing any breaches. I know there's been a lot of sort of like naming and shaming, especially with like big companies, big institutions at the moment with regulators. Like we had those big banks being called out for massive fines. And again, that's going to add, a little bit of worry, I guess, but at the same time, don't do anything to make yourself be named and shamed. I think there's a certain healthy room for mistakes and getting things, wrong accidentally. But at the same time, when you're dealing with finances and you're dealing with people's money and people's livelihoods, you've kind of got to be mitigating the risk in every way that you can. So I think it's very interesting that there are a lot of companies that just aren't really doing anything about this worry. Is, a digital compliance solution the way forward? Probably. I mean, everything else is going digital. It makes sense that you'd bring Regtech and other things into the fray, and obviously, freeing up time from your human resources. I always feel like I sound like an alien every time I talk about like humans, but freeing up time from a human resource to look at other things and using a digital compliance service to go through sort of like the manual data and things like that. It seems, to make sense, and you kind of just want to avoid the reputational damage that comes along with a breach. So at the end of the day, it's all about your customers, right? Whether your customers are the general public and consumers, or whether you are supplying to businesses, whoever you're supplying to, you need to keep that loyalty there. So I think it's a really interesting landscape at the moment. And I know regulation is always very divisive amongst people. Some people think regulation goes too far. Some people don't think it goes too far enough. It's always a very interesting debate. So I guess it's just one of those things that people kind of just have to get on with, especially with, the cybercrime industry. I'd say the cybercrime industry, but like the cybercrime landscape and other criminal landscape as well, just being as hot as it is. So no, it's interesting. And I mean, does that kind of match up with what you were thinking, Tom?
Yeah, I think it was you made an interesting point in the sense of I'd be quite interested to find out the reasoning behind why they're not making these moves. Like you said, too time consuming, too costly, things like that. And there are certain arguments or reasons that maybe aren't acceptable, especially when it's putting their consumers at risk. So if it's just a case of, it's too costly, or, it's going to be too complex to change the systems, with sort of the services in like Regtech that are available nowadays that can support with that. It might be an expensive undergoing, but if they get the right systems in place, then they're a lot better placed to deal with things in the future. It's going to help them with their compliance. It's going to help their consumers because they're following regulations more closely. It was the managing director of Smart Search, Martin Cheek. He said breaking the regulations unintentionally is not a defense. And I think that's kind of the vibe that they got from the report. Was a lot of people were saying, well, we just don't know how to comply because it's too complex, or whatever the reason is. But when it is consumers' data and things that are at risk, then that's not really acceptable, and we need to see more change. And like you said, with the bigger firms, they get cracked down on first to almost have a domino effect on the smaller firms to realize, okay, we can't afford to be caught doing the same thing. And that's why the big firms always hit first with these kind of cases. So yeah, I think you made some good points, and it's a really sort of interesting landscape. But what do you think, Francis? Is there a different take you have on this?
Yeah, I mean, I prepared some stuff, but just on like what you said at the end there about this idea of, that it's big firms that are usually hit first. I think sometimes it's the smaller organizations that think they can get away with stuff because, I mean, there's two ways of looking at it, right? There is the idea that smaller organizations think that, they're going to go after the big guys. They're not going to be looking at us, therefore we can get away with it. Or there's the idea of that, the big firms have, which is we are such a big firm that they're not going to come near us. Like, we're too intimidating. So I guess there's really two ways to look at it. But I mean, the main point that I wanted to bring up, I suppose, was that, I think the idea of we didn't know, that we were making a mistake or something like that, in short, it's a terrible excuse. I don't think you can really get away with just sort of being that negligent, really. And as such, I find it hard to feel sympathetic towards organizations that say, compliance is too complicated. Because, I mean, the way it works is it's to give consumers and businesses a safe experience in that, you don't want, from a business standpoint, you don't want false negatives stopping new onboarding of consumers. But similarly, you don't want bad actors sneaking through the ranks and sort of, giving your organization a bad rep, for letting these people in and sort of to abuse the system. So, I mean, when we're looking at the article specifically, I'm not that surprised that casinos and crypto exchanges have been highlighted as the ones most concerned. They're both industries that have sort of unfortunately garnered a reputation for illicit transactions in the past. And I mean, just look at recently, the SEC announcing that it was basically going to go to war with Coinbase and Binance, two of the biggest names in crypto for, regulatory breaches and stuff like that. And I mean, when you look at it, it really, especially those two names in particular, it really does seem like an oversight on their behalf, and it was an intentional thing. And it's not like an example where you can get away with saying, "Oh, I just didn't know what I was doing." It really sort of it gives that bad reputation to that side of the industry. I think one of my biggest problems that that came about from the article is that these organizations are admitting that the systems they're using are flawed. Like they say, we don't know what we're doing, right? And I think that's where the problem lies, because in my head, I'm sure there's a lot of minute details that mean organizations can't simply allocate resources. But like I said, it surely makes sense that compliance is one place you want to invest. Because ensuring no compliance problems means long-term survival of a business model if it's good, whereas skirting around them, it could be better in the short term. You might not have to spend as many resources, but then it could be disastrous. And I mean, in my head, it just doesn't seem worth the gamble,
Yeah, absolutely. And I think it really just is a case of these firms need to sort themselves out. Essentially, there's not a good enough excuse, and there's enough resources and services out there that they can ensure that they comply with the regulations. They ensure they keep themselves and consumers safe. And I guess that's the bottom line, is that isn't a good enough excuse. And these firms need to invest to keep themselves safe and to stop money launderers from being successful, basically.
Fantastic. Well, thank you for that, Tom. Why don't we move on? Francis, do you want to go first or shall I?
Yeah, sure, I don't mind. So, as I mentioned before, my article is going to be sort of focusing on brands and, how consumer demands are shaping the way in which brands are offering their products. So the article in question today comes from Interbrand, and it was that Metaverse and AI brands are shifting our understanding of consumer behavior. Interbrand, the brand consultancy, launched its 2023 Breakthrough Brands Report, and it finds that the Metaverse, AI, and sustainable tech brands are leading the way in disrupting the global market. The article details some previous examples of organizations that, it's identified as breakthrough. I mean, some notable ones I'm sure you guys have heard of are Slack and Headspace, big organizations. But I thought one of the most interesting things was sort of to really analyze some of the emerging trends from this year's report. So brands that have sharper identity, or brands need to have sharper identities essentially, and they need to know who they are and have a clear stance on their purpose. It may seem quite simple to be saying that, but the fact, well, I mean, I'll get to it, but this sort of ties in nicely, in my opinion, with the third point. But the second point is that brands are looking to engage with customers in a new world of AI and the metaverse. And according to research conducted, interest in AI tools significantly increases when they are paired with specific objectives such as eating well. And then the last point is that brands are working in new ways to differentiate themselves in a crowded market. The world has become overpopulated with brands, making it difficult to break through. So to become a differentiator in a saturated market, brands need to bring something new to the table. And I mean, like I mentioned, I think that first point and that last one work very well in tandem together. And that's the idea of, needing a sharper identity within a crowded market. But, this kind of got me thinking, and that was this idea of, like AI, right? It's really taken off in this last year. And one of the brands recognized within the article was OpenAI, the creators of ChatGPT, which, I don't need to say what that is. We're all well aware of it and, what it's capable of doing nowadays. But it's got to the point where organizations must be including AI in some form of automation to compete, right? And I think we can all agree that organizations must continue to do so and update themselves, otherwise they risk falling to the wayside. But what intrigued me is this idea of a crowded market, because the more businesses update their offerings to stay competitive, in a bizarre sort of way, the more crowded the market becomes. And, the more potentially, less unique an offering can become too, because, more organizations start to do similar things because they realize that if they don't, as I said before, they're going to sort of fall to the side. So I think it will be hard for us to sort of hit the hard reset button, as personalization levels can be achieved using this technology. And it's not like reverting back to the old ways will give organizations an edge anymore. But I can't help but feel like brands looking to enter the space, it isn't so much about innovation anymore as much as it is survival. And I kind of guess that's what I wanted to get your guys' thoughts on. I mean, especially because the metaverse is continuing to expand. But the hype appears to have died down a little bit, right? And that Ready Player One world that I think a lot of us were expecting, it seems to sort of slow down a little bit. So, is it really like that necessity to sort of tailor to implement this tech, or, like, I don't know, is it more innovation or survival? That's kind of really what I wanted to get your guys' views on. Polly, I'll go to you first.
I think when you think about sort of a brand or a company or anything like that, having an identity is possibly one of the most important things that you need. Obviously, and this is just not even from like a fintech perspective, this is from just an entire industry perspective. Having a really solid brand identity is so important to survival. Like you were saying, obviously there's a lot of competition at the moment, there's a lot of different people in the market, so you really have to stick yourself out from the crowd with a really strong brand identity, whatever that brand identity might be. And I think the way that AI is being talked about at the moment, and especially sort of within society just kind of in general, I think a lot of places are kind of capitalizing on the hub around AI and bringing that into their branding, or well, not their branding per se, but like sort of into their company. I think that's a really interesting thing because AI isn't new. AI has been around for a long time and has been utilized for a long time, but now it's the public perception of AI that I think has changed, and people are kind of realizing what it does and how it works. And like you're saying about ChatGPT, everyone's kind of getting switched on to what AI can actually do when it's already been doing it. It's been doing it for years, but now there's kind of like that public understanding of what it is that AI can do. And I think it would be silly for people not to capitalize on that and not to capitalize on kind of the boost that AI is getting at the moment. And I think it's easy that you can use kind of different AI tools to help you with your brand and help you with your business, and that kind of just makes sense. And especially as well at the moment, I think to advertise the fact that you kind of use AI is also kind of pretty good at the moment, and it kind of does help you differentiate them within the market. I do think in somewhat amount of time, whether that's a year or a couple of years or what, I do think it's going to go the other way, and people are going to start saying that they don't use AI in order to sort of like differentiate them in the market. But that's a conversation for another time. But right now, I think having AI and having the AI tools, and not just like any AI, not just being like, oh yeah, we have a cool robot guy, but like a specific kind of AI tool that can help you with your business, and like it said in the article, to be paired with like a specific objective. That is kind of what's going to differentiate yourself. And I think it's just a really interesting concept, and I think this was a really interesting one to bring to the table because it's thinking about AI and other things that we haven't kind of discussed it in this way before. And I also find it interesting what you said about the metaverse, and you're right, I do think the hub has died down. I think there was a lot of initial interest because, like you say, it's really cool. We're going to get Ready Player One. We're going to put on like our headset and then just run off into, I don't know, the Lord of the Rings universe or Star Wars or something, and that'll be really amazing. But that obviously hasn't happened because I don't think that was ever going to happen. And so it'd be interesting to see if that kind of metaverse idea picks up again as it starts to kind of realize what it is itself. Because I do think when it was sort of first announced on that initial hub, I don't think it quite had its own particular identity yet. So that'll be an interesting thing to see. But no, I think at the end of the day, if you want to survive as a brand, you have to have a really strong identity and a really strong way to market yourself. And if, AI and utilizing different things about AI in the metaverse is going to help that, I think brands would be silly not to buy into it.
Yeah, and I guess like you've really picked up on one of the things that I wanted to talk about, and that was this idea of like a hard reset to the point that, not having AI is going to be the differentiator, and that's going to be what makes you sort of stand out and what's going to make customers want to go to you instead. I mean, like you said, I think it's probably a long way off, and we should probably see, where AI goes first. Because like when we think about it in that regard, I always sort of think to myself, well, I think what's more likely is that things are only going to, like the way that technology is, it's very hard to regress, I think, especially when you've got such game-changing sort of technology like things like ChatGPT and stuff. So I think it will definitely be an interesting space to keep an eye on over the next few years. And I really don't know, where it's going to head. But I think it's definitely an interesting thought to keep, or at least an interesting thing to keep an eye on. Tom, what do you think?
I think going back to sort of the question you asked earlier, which is like, is it a case of like innovation or survival? I'll play devil's advocate a little bit, but basically, since like the success of OpenAI's ChatGPT, it sometimes feels to me that some firms have like scrambled to implement AI into their operations or their customer facing services to sometimes just keep up with everyone else. And it's like obvious that AI is going to make a big impact. It's going to revolutionize a lot of industries in a lot of different ways for both operations and for their sort of customers, how they interact with the businesses. But I feel like firms need to make sure that they're actually implementing it to benefit its customers properly in order to compete successfully, and they're not just implementing AI for the sake of having AI. Like you said, like Metaverse news has like really slowed down since the AI explosion, I guess, in popularity. And it makes me wonder is it a case of like firms following the trends, like just in case it continues to explode and they don't want to be left behind. We get something like press releases related to AI, but sometimes I look at stuff and I think, is this just a sort of rebrand of something that was coming anyway? But then rather than making the sort of tool the focus, they've made the fact that artificial intelligence is prevalent in the tool the focus. And it just comes down to a case of sometimes I'm just a little bit suspicious about whether it's actually the best thing they could have done in terms of their own innovation, or if it's just quick, let's involve AI in our website or our operations in some way so we can be another firm that's following the trends. We're keeping up with everything, but they're not necessarily. I mean, obviously, in a lot of cases, they've been really successful. They've helped a customer, like how customers interact with them. But just in other cases, I don't think that's always the case. So I think it'll be interesting to see, like Polly said, like at some point it might become a newsworthy to say we're not using AI in that way or whatever. But in the sense of the way Metaverse slowed down when it wasn't the trend anymore, I wonder if once AI is a bit more normalized, is it going to be a case of we're actually not going to make AI the focus anymore? It's still there, but we're not going to include it in every single press release that we send out because that's not the trend anymore. That's not what's going to keep us as the sort of trendy up. So that was just sort of what I was wondering about that question that you asked, and something I can sometimes suspect, just like day to day, looking at people's like news releases and how they're sort of presenting themselves.
I mean, for what it's worth, I'm sort of in the same boat. I mean, like I've said before, I think a lot of the times I probably come across as a bit of a pessimist on the podcast. Always taking the side of the devil's advocate, and sort of just trying to give that other point of view. But in this case, I definitely do agree with you. I think it was a case of following the trend in order to survive. So I'm definitely with you on that one, and it's a little bit suspicious that sometimes we hear about, oh, we're implementing AI in this way, and it's like, are you really doing that to help, or are you just doing it because it's all your only way that you think you're going to survive. So no, I'm definitely with you on that one. But yeah, let's go on to the final article. Polly, take it away.
Fantastic, thank you. So yeah, moving on to a completely different area of the fintech, let's talk about early wage access. So software provider The Access Group has found that 93% of users who have the option to receive their wages early wage access obviously, have reported this as helping them to manage their financial stress, which is largely caused by the cost of living crisis currently. So other findings from the survey show that 28% of users expect to access their salary early on 12 or more separate occasions this year. For comparison, only 17% of users utilised early pay, which is the Access Group's early pay solution, 12 times or more in 2021 and 2022. So I thought this would be an interesting topic to talk about because early wage access, it came up a lot, I think, when it was first kind of emerging in the industry. And I think we probably talked about it a couple of times before, if not on the podcast, then definitely on the Fintech Times website and stories and features and things. And I thought it was a really interesting one to talk about, obviously, considering the cost of living crisis at the moment and, people struggling to manage their finances. Are we going to see a lot more sort of early wage access coming in? And I think this just gave us a lot of statistics that I thought were really interesting and we could kind of sink our teeth into. So Access Early Pay is the Access Group's early pay solution, and it allows employees to access pay they've accrued so far within that pay period rather than having to wait to a set payday. So you could, I guess it works out daily or hourly, and you can kind of be paid for the week you've worked rather than having to wait until payday. I think it's important to note, I think it is in other places and other countries, I'm not 100% certain, so don't quote me on this, but I'm pretty sure having a monthly payday is very much like a UK thing. I think in other countries having like a 2-week paycheck is more common, or even like a weekly paycheck. So I guess this is very a UK specific thing, though I have heard of an early wage access in other countries as well. But I think it's just interesting. And I think this article is kind of saying that it helps improve loyalty from an employee when you have the option to go for early wage access, risen from 47% in 2022 to over 80% in 2023. And the proportion of people who value early access to their salary has grown from 55% to 72% over the last 2 years. So I'd love to get your guys' opinion on this. And I think obviously the cost of living crisis has hit a lot of people and has made it difficult for a lot of people to, even just afford essentials. And obviously there's been a lot of changes in financial behaviour over the past couple of years, first with COVID and now the cost of living. And it's always a worry for many people, and the stress of kind of waiting until payday. Is early wage access the answer to promoting financial well-being, or is it more of an issue, maybe, like thinking of Francis Devil's Advocate front? Is it going to make people kind of go into a bit more of an issue because as soon as you've got the money, you spend it kind of thing? I'd just love to get your opinions on this. I mean, Tom, what do you think?
Yeah, I think that's an interesting argument, actually, because I kind of listened to it and I thought that it, in some cases, for a lot of people, they're living paycheck to paycheck. They're trying to make their wages last until the next one hits their account. And especially in the UK, like you said, most people are paid monthly. It's a lot of people turn to like buy now, pay later, or like even like small loans so that they can afford things before their wages hit. And I think in this case, it seems like quite a good solution because early wage access means there's no cost, there's no interest. It's not like getting a loan. You're thinking, oh, I don't get paid till next week, so I'll use buy now, pay later, or I'll use this loan, and they're all in some way have interest that it accrues and could get you in more debt in the long run, is more negatively affecting your finances in the long run. Yeah, and it also reminded me of like an article I wrote like 2 or 3 weeks ago, and I think it was Nevada introduced like the first bill in the whole of the US to introduce like regulatory standards for companies offering earned wage access. And even in the case of like most people in the US are paid every 2 weeks, there's still sometimes that element of sometimes you need your wages a week early or a few days early because you can't quite wait until that point. So I thought it was just a good solution because it means that they can access their wages that they have earned already, and there's no interest accrued, so it's maybe less harmful in terms of potential debt that could occur. And the way I see it, if you've worked all week but you're not paid for another 3, why shouldn't you have the ability to gain access to that wage? It's sort of perhaps an aging system now where you're paid monthly when there are solutions available that doesn't have to be the case anymore. Why shouldn't we give people more freedom to do what they can and whatever they want to do with the money that they have already earned?
Yeah, absolutely. I think you're spot on there. Francis, what do you think about it?
I mean, I'm going to try and keep this short and sweet, but I mean, I think one of the big things really is, is how you use it, right? If you're able to sort of just monitor yourself, and I think a lot of the time as well, when you get paid in a monthly form, you get that big check in at the sort of the start of the month, and you think, I can spend it on whatever I want, and then we've seen so many memes about it, I'm sure, of like my bank account on payday and my bank account one day after payday, right? And it's all gone because you sort of don't have that awareness, like that you need to sort of make it last long term. So I think in that regard, actually, it kind of maybe works out better if you could get smaller amounts throughout the month, spend it on what needs to be spent, and then, perhaps you don't make as, let's say, impulsive decisions and purchases. But I think the idea that, 3 in 4 people said that having the option from a future employer or having the option for early wage access from a future employer is a good thing. I mean, yeah, especially if you fall on hard times. Some people prefer the monthly paycheck, but as I mentioned, having that as a fallback, it can't hurt.
No, absolutely. And I think everything that you both have said has been absolutely spot on. And I guess it's one of the things that we probably are going to see more of as we go ahead. Is it going to become the norm? That would be interesting to see whether it does become the norm or we kind of stick with our monthly paydays. But no, I think, yeah, you've nailed it. Let's just see how it all plays out. That does bring us to the end of our discussion today. If you want to hear any more about any of the articles that we've spoken about today or anything else that we've from the fintech industry, head on over to thefintechtimes.com, where you can read plenty more news, insights, and other features all about fintech right there. And let's move on really quickly to what I learned this week. So each week, so much new information and insights across our desks, being on the Fintech Times editorial team, that we're learning something new every single day. So we thought it'd be fun to share that with our listeners. So Tom, what did you learn this week?
This week, to kind of keep it topical with the last article we just spoke about, I learned that around 18% of teachers in the UK have been forced to rely on buy now, pay later options to afford their weekly shop. And I just thought it was interesting that and quite worrying that someone we rely on to educate our youth are struggling so much with their finances, and clearly pay doesn't stretch very far, and they're looking for solutions. Maybe earned wage access could be one to sort of survive the cost of living crisis.
Yeah, fantastic. And Francis, what have you learned this week?
So this week I did an article on the launch of FedNow, the Federal Reserve's instant payment service in the US. And we basically gathered a bunch of insights from experts across the industry. And for the most part, everyone's very excited about it. So yeah, that's what I learned this week. A little shameless plug to that article to go check out a bunch of different viewpoints that are excited about this potentially revolutionary payment service in America.
Amazing stuff. Everyone should go read that on thefintechtimes.com. And then what I learned this week was that NatWest has launched a business banking switch offer for UK businesses earning up to £2 million in turnover. I just thought this was particularly interesting because we see a lot of like switching offers for consumers, and so to see one for businesses is pretty cool as well. But anyway, guys, thank you so much once again for chatting about fintech with me. It's been a pleasure to have you. And yeah, hopefully the weather stays nice for you. But so I'll catch you on the next one.
See you later. Enjoy your weekend.
See you next week, guys.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.